Good afternoon, everybody. My name is Lorena Sorrentino, and together with my team, with Ilaria and Georgia, I'm very pleased to welcome you to our roundtable on sustainable finance to boost the green and digital transition, organized together with the UN Global Compact. So before looking at the agenda for today, I just quickly wanted to mention a technical information. Maybe many of you are already very familiar with the platform because you have been with us since the beginning of the summit, but just I wanted to remind you that to make full use of this session, you can use the live discussion function that is at the bottom right corner at the screen. You can either use the chat where you can interact with the other attendees, leave comments, remarks, but also perhaps share links to activities and initiatives that might increase our collective intelligence around sustainable finance. And then you can also use the questions tab where you can pop a question to a speaker, but also upvote other questions. So it's interesting also for us to know what the audience is more keen to know about. So please use this function. It will be very interesting to interact with all of you. So looking at the agenda for today, of course, our main topic is around sustainable finance and how this can boost the green and digital transition. Now, since the beginning of the summit that has been centered around climate action and just transition, we have heard already a lot around sustainable finance from Commissioner McGuinness on the second day, from Mr. Timmermans, and especially for what concerns the urgency around climate action and the fact that it is very important to make this transition right, keeping the social justice at the center. And today with this roundtable, we wanted to go one step further because we heard already how it is important and key the role of the private sector, and in particular as financial actors in the system to make this transition happen, to have enough and the right investments where it's more needed in order to support sustainable activities. So in this session today, we would like to provide you some examples of companies and stakeholders that are already working in this direction. And in the first half of the session that will be moderated by Mrs. Maurice from the UN Global Compact, we will hear about the experience of two CFOs that will share with us how they are implementing within their companies sustainably aligned financial strategies. And then in the second part of the session, we will instead look at some tools and instruments that are already in place by leading entities that are trying to promote sustainability and climate neutrality. And there we will have with us also the European Investment Bank, Unipol, and BBVA Microfinance Foundation. So this is, let's say, the objective of the session today. And just before going deeper about the topic, I wanted to spend 2 words about CSR Europe. For those of you that are not familiar with our network, we are a network of companies. From one side, our members are corporate like the ones that you see on the left-hand side on the screen, that group from different sectors and from different geographies. Then we have also as members national partner organizations, so CSR networks like us that act at local level in every European country and also a bit beyond. And last but not least, the last 2 rows of logos are related to our associated partners. So organizations we have ongoing collaboration on ad hoc projects like indeed the UN Global Compact, the European Investment Bank, but also other companies and stakeholders from the academia world or civil society. In terms of the area of our work, of course, the discussion today falls under, let's say, the pillar that you see on the right-hand side of the screen, sustainable markets and finance, is where we try to support the companies in their journey on corporate sustainability reporting and sustainable finance. But of course, we also work, and have you seen from the program of the summit, we work also on other topics related, for example, to what we call people. So initiatives related to workplace innovation, lifelong employability, and decent work, but also we have a set of initiatives and projects around materials, so sustainable value chains, and also all the environmental aspects of sustainability, including circular economy. So this just to set the context from our side. And of course, if we look at the topic that we are going to discuss today, you see that at the European level, in terms of the policy framework, a lot has happened in the last months. 2021 has been very full of initiative, both from the perspective of corporate sustainability reporting, with a new proposal on corporate sustainability, with a new proposal on corporate sustainability directive, but also with the work that it's ongoing in relation to the standards. But of course, on the finance agenda itself, the Commission this year has reached two major milestones. One is the entry into force of the Sustainable Finance Disclosure Regulation in March 2021, and the publication of the renewed strategy this summer. And of course, this altogether would like to contribute to the objectives set already at the beginning of this Commission with Mrs. van der Leyen with the European Green Deal. Of course, this has been an avalanche of new measures, has been a lot, and of course has been complemented by also a number of other measures, especially for what it concerns the taxonomy, that we heard also from the words of Commissioner McGuinness is a key tool to secure this framework for action for investors and for companies to identify what sustainability activities look like. And of course, the work that has been done so far has been a lot focusing on environmental objectives of the taxonomy. On the climate part, the work, let's say, is concluded with the delegated acts published earlier this year, but the work will continue on the other environmental objectives and will expand most probably to what we call a social taxonomy. So also to see how we can classify through this system also the socially sustainable activities. And if we look at the, let's say, the renewed sustainable finance strategy, you see here recapped a bit the six main objectives of this strategy, that of course links up different pillars of sustainable finance, including the EU taxonomy, as well as the financial and non-financial disclosure by companies and financial institutions, but also looks at tools developed by the European Union to support the transition to a decarbonized economy. And also there is an important part related to the, let's say, global dimension of sustainable finance. We know that Europe is leading the discussion at international level as co-chair of the International Group on Sustainable Finance, but also in the past days we have learned how much the EU is also engaging with partner countries since, let's say, the agenda on sustainable finance, it's a global agenda. It's not only a European business, and has to be approached at the global level. In terms of what we do at CSR Europe to support companies in this journey, of course, first of all, we provide them with the intelligence needed to understand these changes, and in order also to anticipate what is coming down the line in terms of forthcoming regulation. But also we have a number of activities like Atelier and a number of tools that we have put together, like a CSRD checklist that can help companies navigate these different requirements that have arrived in the past months and will not stop in the months to come. And for, let's say, from our perspective, what is more important, what is critical for companies to look at all these changes in an integrated way. So not try to address the single measure, the single initiative through a silos approach, but do it in an integrated way in order to organize also internally in an integrated way for the teams that will have to deal with this new regulation, will have to comply with it, but also to avoid to have a simple tick box exercise, so only a compliance approach to this, but use really reporting and all the new measures related to sustainable finance as really a means to accelerate the transformation that is needed inside the companies to achieve the goal of the agenda on climate and on just transition, and also to reach the targets that they have set for themselves in terms of sustainability. And Also, in terms of service that we provide to companies, we also have a number of ad hoc tools and services that can help companies moving in the right direction, like, for example, the report review, but also the materiality assessment and a number of others, like the maturity and integration one that goes at assessing the level of maturity of a company strategy and integration of sustainability into its business practices and services. So I will close it here in terms of introduction, and I would like to give the floor now to the moderator and facilitator of our first panel, that is Marie Maurice, Head of Sustainable Finance at the UN Global Compact, that will facilitate our panel on how to implement a sustainability-driven financial strategy. Marie, you have the floor. Thank you.
Thank you so much, Lorena, for this warm welcome, and I think a very useful setup of the scene, what we're actually going to be talking today. And I don't want to kind of spend too much time on this, but just a quick introduction of on the CFO task force, of which John and Alessandra are part of, and are going to be joining us today to talk more about the implementation and how we can actually streamline those strategy internally. So I'm Marie Maurice, I'm the head of sustainable finance at the UN Global Compact. We're delighted to be co-hosting this session with CSR Europe today. We have this great partnership with CSR Europe, and looking forward to many more of those. So thanks for having us and hosting with us. So I've mentioned Alessandra and John. I'll kind of give them a little bit more of an introduction. There we go. They're coming almost live on the screen shortly. Alessandra Pasini is the CFO of SNAM, and she will tell us a bit more about what the company do, but most importantly, of how she's actually been implementing the SDG-driven work around corporate finance and investment. So we're looking forward to hearing from you very shortly, Alessandra. And John Ormerson is also a CFO, but on the banking side, so working for Iceland Banki. And it will bring the perspective of a bank. So we thought it'd be really interesting to have the two perspectives today. So over to you, I think, Alessandra, to start with. One question for both of you, and we have many more. We're also conscious of time, so wanting to make sure you have sort of 6 to 7 minutes to go through in a bit more detail, without rushing too much, what your answer will be to this question, which is around sort of how do you actually implement a sustainability-driven financial strategy? So both from a corporate perspective and from a bank perspective. So over to you, Alessandra, to kick us off. Thank you.
Thank you, Marie, and good afternoon, everybody. It's always a pleasure to be with the colleagues talking about the sustainability and the importance that it has for our corporates and our companies, but also for all of us as individuals in the world where we live, because I think that's one of the big shifts that I think we've all been experiencing over the past few years. Let me first start spending a couple of words on SNAM and how we came to join the initiatives under the UN umbrella, and how much we are a strong supporter and believer of these initiatives. SNAM is the largest European and probably one of the largest globally gas transmission and storage operator. So we clearly are masters in managing the development and operation of infrastructure that today transport fossil energy, which is instrumental to the transition, but that needs to look forward to the future where fossil energy is not going to be part of the energy mix, and therefore we need to prepare and contribute with our expertise and our strategy to a new future, which is in our view going to be equally bright. We have been seeing before others the role that hydrogen as an energy vector will have, and the role that existing infrastructure can continue to play in that environment, and how much we can stimulate the evolution of this journey. With this in mind, in terms of industrial and strategic backdrop, let me go back to the question that Marie has raised. I think that clearly the first thing that a corporate or bank should be focusing on is what is your SDG thesis and philosophy, because that impact everything you do in terms of your strategy, in terms of how you manage your people, in terms of how you manage the communities that are impacted by what we do, and how you also manage the way you finance the activities that you run and you operate. It's clearly very important to move away from statements and qualitative elements and actually be very strict and rigorous in setting goals, targets, and indicators that can promote on one side, but measure in a credible and transparent manner on the other side, the contribution that the company provides under the relevant SDGs. And then what is important is to glue these two elements, so the thesis and the vision with the KPIs on the and the targets into a clearly well-defined and spell out strategy that then can drive the way you allocate capital and the way you finance that capital allocated in a consistent manner. And we are lucky in a way because what has been happening over the past couple of years around the pandemic has given an amazing boost to the focus on all of these topics, and therefore people like us in the companies where we work for can really give an even stronger contribution on the SDG and ESG agenda in the environment in which we operate. It's very important to communicate all of the above to investors and stakeholders, and it's very important to do so with the right language. And the language is somewhat sometimes different depending on the different stakeholders. You need to focus on certain elements when you speak with rating agencies, when you speak with auditors, when you speak with banks, when you speak with investors, being them equity or fixed income. But I think that, again, we have seen a clear journey from a traditionally strong attention that was more coming from the fixed income environment into a much global, more global focus that is now impacting all the stakeholders that with which companies need to operate. We started our journey 5 years ago, and we started to focus in introducing sustainability driven instruments and having a sustainability driven financial strategy since 2016. And our goal starting then was to have a growing share of our financing coming from sustainable finance instruments. And this is one of our strategy and is one of our goals, and is part of our long-term commitments, both in terms of ESG objectives, but also in terms of actual share of finance that is ESG compliant and sustainable, that can be labeled as sustainable finance. We have been starting from zero in 2016, and at the end of last year, we already were at 40%, and at the end of this year, we expect to be above that level in a significant manner. But given how much we were a believer of all of this, we were very pleased to join and be a founding member of the UN Global Compact Task Force, because we think it's the right venue to do what I was saying before, try to put together different perspectives, different vision, different sensitivities, and come out with a more coherent language and more coherent set of targets and KPI that can be more consistently adopted by the different stakeholders, because only by having these consistencies, rather than having different stakeholders having different KPIs that they focus on and they look at, that there will be a greater push towards a increasingly more ambitious targets. And I think that this is something that it's very important in our mind when applied to companies that operate in very different sectors. Each of it will have to face ESG topics, and in particularly sustainability, in a different manner. Only by, particularly when talking about energy, only by understanding that the value to achieve net zero and the chances of achieving net zero are a function of each player is operating his own sector, doing the most of what they can in what they do, in their core business. It's much easier to achieve certain objectives and targets if you are a player in the renewable energy space, for example, but you can only contribute and be conducive to the objectives that different institutions and member states are setting for themselves by doing the maximum what you can in your core activities. And going back to what we do, we are today doing something that is relevant for the transition, but we know we need to evolve. And by being a key actor and a leading actor in this evolution, we will be contributing to a faster transition in the context of net zero. We apply sustainable finance across different type of instruments, being them the capital market of bank financing. And we always now look at having ESG KPIs in everything we do. And that's something that we see growingly being undertaken by a number of corporates. On the capital market side, we started our journey in 2019 with what we called back at that time a climate action bond, which was the first one in Europe. And then we have evolved into transition bonds. And we've issued a number of instruments, and actually we've been awarded by relevant by environmental finance as that instrument has been awarded as a forward thinking and innovative instrument. What we wanted to do, given who we are and what we do as core activities, was create a transparent and credible dialogue with stakeholders and investors around exactly how we finance what. And so we went through a user proceeds format, under which we comply to disclose at the end of every year what we have done within the framework. And so investors can track year after year the consistent compliance of the principles under which we've been issuing these instruments and the actual investments that have been done. And we think that this is important because by creating this transparent dialogue, we, on one side, educate investors on how much companies can do in their core activities as they keep evolving towards more sustainable and green and ESG relevant actions. We are looking to have an increasing share of our investments that are SDG compliant, although at the same time keep doing and activities of public interest, because we do serve industries and residential customers that need to be heated over the winter. And we've also introduced a very deep and comprehensive ESG scorecard last year when we committed on the scope 1 and 2 to achieve net zero by 2040. This scorecard and the sustainability model that is behind basically establish for SNAM over 140 KPIs in the ESG environment, many of which have multi-year targets that we are undertaking to comply with, and that we will likely go to revise and increase and raise the bar constantly to make sure that we can do more or faster in the scope of the activities that we carry. ESG is not just KPI, is not just finance, but is a vision. And in that regard, I just wanted to, before I conclude my few words, to share a couple of decisions that SNAM has undertook, which I think are important to underline how much we really care about ESG and how much ESG is part of our strategy and our vision. First, we have been the first Italian company to introduce an ESG committee rather than purely a sustainability committee as a listed entity. And this is a corporate governance body that advises the board of directors around ESG matters. This committee has suggested the company to use the SDG Action Manager, that is a web-based impact management solution that has been launched by the UN, and that we think enable businesses to take actions on the SDG fronts through a very dynamic self-assessment and benchmarking with the objective of continuous improvement. At the same time, we also amended last February our bylaws to reflect what is SNAM purpose, which is energy to inspire the world, and to clarify that our aim of pursuing sustainable success through creation of long-term value for the benefit of our shareholders has been and will be carried out, taking into account interest of all stakeholders, including our employees. And this is something that I think it's important. One of the elements that I can see has evolved the most over the past few years is how much people really care about these topics. At the beginning, these were mere topics that were cascading top down. Now these are topics that are actually being pushed up, even by people and colleagues and team members, because are part of our lives. And there is a different degree of awareness and sensitivity on how important all of this is. And so going back to some of the words that were given at the introduction, this is not a tick the box exercise. This is something that companies, at least here at SNAM, really believe as a crucial part of what we are mandated to do for our purpose. And these type of initiatives can only be successful if they are bought in by all stakeholders and all the individuals that are part of the corporate lives.
Thank you so much, Alessandro, for that. And I think hopefully, a very kind of strong message to hear about, sort of how do you actually shape those sustainability or a sustainability-driven financial strategy, and looking at not just the KPIs, which we would expect, but actually a broader vision and driving this through stakeholders and ensuring that we have a common language. And that's really what the CFO task force is about. I'd love to bring you, John, next to tell us a bit more about sort of your vision and how you're doing it, because I'm sure it's there's similarities but also differences. So over to you, John.
Thank you very much, Marie, and definitely many similarities. I'm CFO of a bank situated in Iceland in the North Atlantic. We enjoy about 30% market share in our local community. So obviously we can have a big impact here in how we behave and what we do. If we move on to the next slide, and to second what Alessandra mentioned earlier, is that ESG is not just a side business. It's fully ingrained in our business now. So it's not just a set of KPIs, but we're ingraining it into all our business units, and they are all setting themselves goals on that front, both with their own operations and also how they can impact the community. So moving to the next slide, we are one of the banks that joined the 2040 net zero initiative earlier this year. So 43 banks in Europe altogether, and that's obviously something that we are very proud of. And we obviously need to focus on quite a few things on that front. But moving to the next slide, I think it's important to note that as a bank, our own operations have a very limited impact on the environment. It's less than 1% of our overall footprint. When we talk about net zero, the operations of the bank, it's a rounding error, you could say. So even though obviously we are changing into electric cars, making sure that we do everything properly in our operations, our key focus is on the loan book and how we can impact our customers. So moving to the next slide. The first initiative that we did was to launch our sustainable financing framework, which allows us to issue bonds internationally to fund ESG-related projects. And we had so most of these are green bonds or social bonds, but we actually issued a sustainable bond, as we call it, which they can use for either green projects, red ones on the social front, or blue, that we call blue, which is associated with the waters and fisheries, especially here in Iceland. So we have already issued under this bond and then using the proceeds, obviously, to support our customers on this front. And so moving to the next slide. As I mentioned before, the biggest question for us is how we can impact our customers, and especially through our loan book. In our own operations, we have already discussed this with all our biggest vendors to tell them what we will require, and what we're doing there is actually saying that first we don't have strict requirements in the beginning, so we're providing guidance for the first couple of years, but all our vendors know that more strict requirements are coming out in a couple of years' time, so they have a bit of a time to prepare. In terms of the loan book, to reach the 2040 net zero, the first step is obviously to measure the footprint from the overall loan book. And you can see on the left side here that in terms of the individuals, we have already measured 90%, but in terms of the corporate loans, we are just starting. So we have measured there around 10%, and that's mainly our car leasing loans, which are fairly easy to measure. To measure the footprint from our corporate customers in other industries, it's quite complex and it takes time. And we want to be sure that we have the measurement in a good place before we start setting goals, the short and medium-term goals. On the left side, you can see that even though loans to individuals are quite a large part of our book, and we have only measured a very small part of loans to companies, that the emissions are almost entirely coming from loans to companies. The reason being that in Iceland, households are mainly, so we use geothermal power to heat the houses, and so there's a very, very small carbon footprint from the mortgage lending business due to that. But on the car loans, like I said, that's where we have measured on the corporate side. There the transition is happening quite fast in Iceland with a very strong pickup. And for example, Tesla is the biggest selling car this fall. So it's moving quite rapidly, but there's still a long way to go, obviously. Then on the next slide, there you can see in terms of our balance sheet. So even though we haven't measured the corporate loans fully, we have some indications on where the impact is. And you can see here on the left side that mortgages are close to half of our loan book. But on the right side, you can see that it only accounts for a very small part of the emissions from the loan book. So when reaching net zero, the question is, where should we focus? And here you can see that the transportation, even though it's a small part of our loan book, it's close to half of the emissions. So we are seeing that that's definitely going to be our main focus, both in terms of car leasing loans, also loans towards obviously trucks, and then the question is airplanes and the ships, especially the shipping vessels. And there, unfortunately, it's still very slow progress. It has to be internationally harmonized in how to connect the ships and how to load them and what to use, whether it's going to be electricity or something else to fuel those ships going forward. But that's definitely where we have the biggest possibility to make an impact for our customers. And so moving to the next slide, what we see is that the banks representing 95% of all lending to European corporates have already the ambition to be Paris aligned. But at the same time, less than 10% of European corporates have set targets on that front. So this is clearly where we can make the big impact, is to talk to our clients, get them on board to set targets and obviously make the transition very different for different industries, what needs to be done. And we will obviously then provide the financing and provide the incentives through our financing for them to take these steps. So it's, but not only the financing, also just the discussions and the incentives and trying to push them into that direction. And fortunately, I think that a lot of corporates in Iceland are starting on that front, and we're quite hopeful that we'll see a very rapid movement in the next couple of years. So that's what I wanted to say, Marie.
Well, thank you so much, John. I think a lot of sort of similarities, as I said, but also key differences around sort of ensuring that the focus is on how you can actually get your customers to create impact. And I think that was staggering what you just shared at the end around the 95% versus 10%. I think that's definitely a number that kind of shows the gap still between at least the intent, not being necessarily yet disclosed. I'm sure it's probably more than 10%, but corporates not yet communicating to investors and lenders about sort of those decisions and key transformation business in a way that Alessandro was telling us about, and SNAM has been doing, and many others as well. But it's definitely that kind of movement that we're looking at creating. I guess we've got a few minutes left. A couple of maybe additional questions. One in particular around the role of CFOs. Alessandro, just 1 or 2 minutes on that. Have you seen it sort of changing? We've just talked about this gap between sort of the willingness of lending and the kind of push from the investors and bank side to get more corporates on board. What do you think the role of CFOs can be in achieving that?
Thank you. I think that the role, I think, of the CFO is really to be a very consistent and focused pusher within the organization to always keep the bar high. I think that we are the ones that spend most time with investors and different stakeholders when commenting numbers. And I think the numbers and being specific and having KPIs and pushing for revising KPIs and tracking, that's what we do every day. And I think that in a way, as I was saying before, I think that what has been happening globally is a great help for CFOs, because some of the push that we used to do 4 years ago now are not even push. It's a natural thing that the company feel itself. 5 years ago, we didn't have a dedicated ESG team. We had some sustainability dedicated people. Now it is an ESG dedicated team that it's much more stimulated. So I think, at least in my experience, is a situation where we are not on our own any longer because we wanted sustainable finance, but there is a corporate vision, a corporate purpose, a will, which is then finding increasingly receptivity and focus by investors. So and this create even more ambitions, which I think it's very good. It's very positive. We need to be probably, as CFOs talk about numbers, we need to keep the bar at the center in making sure that people understand that it's very easy to slip into a narrative, and the real contribution that CFOs can give is by being very specific and try to push for raising the bar, knowing that you need to deliver, because ultimately that's what investors expect from us. So I think that this is the element where I think CFOs can really give a strong contribution.
Thank you, Alessandro. And John, I guess final few words. But what do you think? We've looked at progress. What remains the main challenges in this sort of particular context at the moment? What would you say, especially on the back of the last 2 years? What are the kind of 2 or 3 challenges that I know it's a sort of tricky question for like 2 minutes left, but perhaps if you want to share that with us, that'd be great.
Yeah, first, very quickly on our role, I think our main role is just to show the passion for this and show employees that we want them to deliver and make progress on this front. In terms of the challenges, there are many challenges ahead. The measurement first of the loan book and how to measure it going forward and how to provide the right incentives. That is the biggest challenge, and where our focus will be as a bank.
Excellent. Thanks for keeping short, both of you. We appreciate it. I know there's many more interesting panels coming. So thank you on behalf of CSR Europe and the UN Global Compact for being here, sharing your insights. I hope that inspires many of you not just to join the group, but also to push forward with this agenda, which is becoming more and more crucial and mainstream. So thank you, and I will pass over to Georgia Mikoli, who I believe is actually moderating the next session. Thank you so much.
Thank you.
Thank you, Marie, and thank you as well to Mrs. Pazzini and Mr. Omerson for joining us today for the first session of this European Roundtable. And indeed, in this other, let's say, half an hour, a bit more than that actually, of discussion, we will focus indeed on a different aspect of the sustainability and sustainable finance discussion. We decided to focus the second part of our roundtable today on some successful examples and tools and projects that some key stakeholders are putting in place to translate into more operational commitments. Indeed, the ambitions and expectations that have been mentioned also by Lorena when talking about what the regulatory officers and responsible people are putting in place. So basically, we today will focus on the three main pillars of sustainable finance, and this is why we have representatives from the banking sector as well as the insurance and investors. And this is why we think this is a good way to approach the topic, to give also the audience a wider approach, a more integrated approach, in order to understand indeed what's at stake, but also what's on the plate of the main stakeholders right now. So today, happily, we have in our second panel discussion, Mr. Peter Mulro from the European Investment Bank. So Mr. Peter Mulro is indeed the head of investor relations at the European Investment Banks that he has rejoined in 2019. And he is also working on investor relations, sustainable finance, and also credit ratings. And he is co-leading for EIB some other external activities, as well as the EU platform on sustainable finance and the Green and Social Bond Principle Executive Committee. We also will hear from Mrs. Giulia Balugani, Sustainability Manager at the Unipol SAI Group. Mrs. Balugani has a long experience of 17 years working in a consultancy firm, the SCS Consulting, but also from November 2018, she joined the Unipol Group, more specifically as a Sustainability Manager for the Unipol SAI Assicurazioni. And last but not least, we will hear also from Tula Ducasse, she is the head of public affairs for the BBVA Microfinance Foundation, but has indeed a long-standing experience also working for other organizations such as indeed Ecoris and so on. So before jumping right into the conversation and the discussion, I would like also to remind to our audience the possibility that we have through our platform to ask questions directly to the panelists. At the end of our panel discussion, we will have also 15 minutes to address your questions directly to our panelists. So please do not hesitate to do so. And without further ado, I would like to invite on the stage and I would like to give the floor to Mr. Peter Mulro also to guide us a bit more into what the European Investment Bank is doing specifically on indeed on sustainable finance, but also what is putting in place also as the European Climate Bank, as we can say so. So please, Mr. Mulro, the floor is yours.
Okay, thank you very much, Georgia, and thanks very much for this opportunity. I think that the broader theme that we've been discussing as well is SDGs, and I just wanted to share with you a few data points to see where we are, because I think it's quite an interesting indicator of how we've progressed. So if you look at the sustainable bond market, back in 2018, already about 1/3 of bonds explicitly aligned with SDGs. Only 2 years later, it was already close to 64%. And given the growth of that market, it's quite a significant number. It's over 380 billion of bonds had some sort of explicit SDG alignment. So I think we can say that the market for sustainable bonds with some sort of clear mapping, and by the way, there is a nice spreadsheet you can download from the ICMA website with the mapping between the principles and the SDGs. There is progress. That's the good news. And of course, EIB is walking the talk, and we integrate SDGs in our in-house taxonomy, and soon we'll of course be integrating the full EU taxonomy, which as you may know, of course, the whole EU construct is designed to integrate with SDGs. Now, the news which is not so encouraging is if we take the view of investors on this. I was just reading a report a couple of weeks ago by M&G, a kind of bit of a progress report, and that was not so positive. So they said we're basically behind schedule. We need to accelerate. In their 2021 report, 9 of the progress on 9 goals had not moved since 2020. Now we can discuss the indicators and how they were constructed, but anyway, I'll add a couple more points. So on 4 goals, they'd seen some deterioration, even, for example, SDG 1 on poverty, and on 4 goals, they'd seen improvement, although in some cases quite marginal. But the areas of improvement include clean water, sustainable cities, and so on. So, we have a kind of scorecard which is a bit mixed. The financial markets are seem to be doing their bit, at least in the debt market. Maybe some of my colleagues can help me out here on the equity market to see how issuers in general are in their sustainability strategy are aligning with the UN goals. But I think that's interesting to see this kind of acceleration on the one hand, and still, not globally, not enough progress. So it's kind of it may sound a bit paradoxical, but this is what we're seeing, because of course, sustainable bonds are only a small fraction of global finance. We need much more mainstreaming. And my last point is that I think that really we can integrate this in financial products, but the real how should I say, the real ointment for this will be transparency. And I think what is coming through the pipe in terms of mandatory transparency in relation to taxonomy in Europe will give us a much clearer and stronger scorecard, and it'll be more granular. And I think that's important, because looking back, many people have aligned with SDGs, but really to ensure full accountability and impact, it needs to be quite granular, much more granular than the guidelines from the UN. And that is the way the EU has gone with its taxonomy. So I'll stop there.
Thanks a lot, Mr. Muro. Indeed, the progress or the lack of is actually a key topic that we've been discussing over these 4 days of the European SDG Summit. But wanting to focus also a bit more on the progress more than the lack of, it's quite remarkable and important to say that if there is such progress, is also because of what is happening around us, and what projects that are in place are actually achieving. And this is also why I would like to jump right into the conversation with our second speaker, Mrs. Giulia Balugani, as I said, Sustainability Manager at the Unipol group. And indeed, Unipol has been engaging so far with the Life ADA project that I find really interesting personally. But that has been let's say thought in the area of Emilia-Romagna in Italy, but also will be probably enlarged to other areas of Italy and so on. So my question is, of course, please tell us a bit more about this, but also what's the role that you have seen of the insurance sector overall in achieving this transition and the goals that we have seen setting to us. So please, Mrs. Giulia Bologani, the floor is yours.
So good afternoon to everybody, and thank you for the opportunity of being here. So today in this discussion about the role of financial sector in boosting the digital and green transition, we decided to share with you a project in which we aim to put in practice, or at least we try to put in practice, what the taxonomy regulation asked to our sector. That is to support the adaptation to climate change. So please, the next slide. Facing climate change, the insurance industry can play a triple role. The one of risk manager, supporting the physical risk management, the risk carrier role through the management of financial risk, and of course the investor role through the asset management. So since 2015, when Unipol Group published a position paper called Unipol for the Climate, we have been clear the prevention and the management of climate-related disasters need a strong collaboration between the public and private sectors. Because neither of them alone has got all the skills, the resources, the tools needed to manage growing risks and growing insurance claim, of course. So please, the next slide. So we are trying to put this model that we have well clear, to put this model in place through Life ADA project. The issue we want to tackle, of course, is climate change, and the sector interested by the project is agriculture. In fact, ADA stands for Adaptation in Agriculture. And of course, I don't need to highlight how much this sector is fundamental for society, for economy, for life in general. So main object of the project is to enhance the capacity of agricultural sector to adapt to climate change. And here for agricultural sector, we mean both the producer organizations and the farmers. So the way the project aims to do it is knowledge transfer and provisioning of tools to define efficient adaptation plans. But we will see a bit more in details in the next slide. And we think that an important contribution that ADA project can bring to the debate on how to face climate change is the public-private partnership model on which the project relies. Putting together insurance, public administration at the regional level, producer organization, and scientific institutes. So we think this is a very key point of this project. So please, the next slide. And let's quickly enter a bit more on what we are doing and what we will do to reach these ambitious goals. Firstly, we need to increase the firm's awareness of climate risks and of adaptive measures that they can take to prevent and reduce impacts of these risks. So our starting point are climate scenarios. We are working with our scientific partners to building scenarios that are very focused on the territories in which we develop the project, and that are able to help us understanding specific impacts for the different cultures that are included in the project. So very punctual work. And this knowledge transfer will be made possible by structuring a tool, a very easy to use tool, to support farmers in defining the adaptation plans that suit better for each of them, balancing cost for adaptation measures and benefit that are productivity and maintaining productivity and in preventing losses. So why an insurance company decides to promote such a project? As an insurer, we have a specific objective in this project that I can easily define a business objective, or even better, a way to create shared value between companies, insurance companies, stakeholders, and society. With this project, we want to find a way to maintain the insurability of the agricultural sector. Of course, we want to fulfill our social role and ensure such a fundamental sector, but at the same time, we need to make it sustainable from every point of view. So we think that this means for us define how an insurance company can be effective in supporting the risk reduction in this sector, because we have to reduce risk before we can carry the risk in a sustainable way. And of course, as I said before, public sector can play and must play a key role in this process by defining regulatory measures that incentivize and facilitate adaptation and financially support adaptation measures, for instance. So please, the next slide. And in conclusion, only a few information on the project that, of course, is co-funded by the EU Life program and involves Unipol-SAI as the project coordinator and 7 partners that are very skilled, motivated. And there are 3 supply chains involved that incidentally are for Italian economy source of relevant value added. We are speaking of dairy, wine production, and fruit and vegetables. Pilot region is Emilia-Romagna, as I said before, where the regional government is partner of the project and where, as a first step, we will reach 6,000 farmers. But of course, we won't stop here. During the second phase of the project, 15,000 of farmers will be involved, and with a good dissemination work, we think we will potentially be able to reach till 242,000 of farmers.
But before that, I would like now to give the floor to Mrs. Ducasse, to whom I would like to ask a specific question, like, given your role in BBVA and your experience as well, what can sustainable finance, in your opinion, do for the more vulnerable community? So what in practice is doable there, and also why it's important for the achievement of sustainable development goals to see sustainable finance more active?
Thank you. Yes, sustainable finance is as essential for vulnerable communities as it is for other segments of the population. And let me illustrate this from the experience of the BBVA Microfinance Foundation. And please show the next slide. I don't know if the slides are being seen now. Yes, lovely, thank you.
Yes.
Which was created by BBVA in 2007 as part of its corporate social responsibility. Thus, we are a non-profit with the purpose of promoting the sustainable development of people under vulnerable conditions. And we focus on people with productive activities, the entrepreneurs. Next slide, please. With 3 strategic priorities: the inclusion, women's empowerment, and the environment. And next slide, please. And the challenge we have ahead is very ambitious in terms of the rates of poverty, inequality, and financial exclusion. Next slide, please. And answering to the question, microfinance contributes to sustainable development if the entrepreneur's activity progresses, covers all costs, and generates sustainably a flow of net income. The assets and the profits generated by their micro businesses is what allows them to move out of poverty. And this is precisely the objective of our productive finance methodology. The foundation was created as a contribution to the Millennium Development Goals. For this reason, it was naturally aligned with the SDGs. And in fact, financial inclusion is essential to the achievement of the 2030 agenda, starting from SDG 1 and its target 1.4 that says by 2030 ensure that all men and women, in particular the poor and the vulnerable, have equal rights to economic resources as well as access to financial services, including microfinance. I would like to show you a video that explains how our activity relates to the SDGs. Please show my first video.
To transform our world. This is what the BBVA Microfinance Foundation does when promoting the development of vulnerable entrepreneurs in Latin America. A roadmap it pursues every day, aligned with the Sustainable Development Goals of the United Nations Agenda to make the world a better place by 2030. It makes use of a technological platform that gathers information from its institutions in 5 countries. With the experience of its founder, BBVA, and its innovative vision, the foundation is committed to harnessing the digital revolution to reduce poverty, to transform financial inclusion to reach places nobody else can, and to bring financial services closer to entrepreneurs, avoiding unnecessary travel and the cost it entails. With the new technologies, we train our thousands of loan officers through a digital campus which drives the progress of entrepreneurs, most of whom are women that we support with specialized financial services and training. And for them to improve their lives, we design programs that enable universal access to water and proper sewage facilities. This way, we facilitate growth by making these tools accessible to all. And to make sure that no one is left behind, we also innovate in distribution channels through a mobility strategy based on digitalization, which brings services closer to entrepreneurs, simplifying their operations and promoting equal access to opportunities. Thanks to our social performance assessment, we know that our entrepreneurs reinvest part of their incomes in improving their homes, which is frequently their place of work. This is why we offer financing and technical assistance so they can make that project come true. In our commitment with sustainable development, we protect the planet through more environmental-friendly practices that we promote among our entrepreneurs and in the daily routine of our employees. Our productive finance methodology also allows us to reach the most vulnerable during key moments, like the Colombians, who as of today are compelled to start anew after years without peace. We forge alliances with leading development partners as a benchmark institution in the international microfinance sector to continue supporting today's and improving tomorrow's.
And coming back to these slides, I would like to comment on the Foundation's impact assessment that I think it can be useful for other organizations committed to the SDGs. First of all, it is a management tool. Our leadership pointed out the need of regular information and indicators on social performance in order to take informed decisions. For this, we needed to measure. This, we started by analyzing the existing models, and in our case, we came to the conclusion that we needed to create a tailored model for our activity. This implies resources. We have a dedicated impact assessment team in Madrid and in the 5 countries where we have microfinance institutions, in Colombia, Peru, the Dominican Republic, Chile, and Panama. The system is embedded in our daily operations, and it has been a learning process. New indicators and supplementary research is added as needed. And I know this explanation is very brief, so for those of you interested, you can visit our website where we have our annual social performance report that we've been publishing since 2012, and that has a true explanation on this system. And finally, we know that the most vulnerable are the hardest hit by natural disasters caused by climate change or a pandemic like COVID-19. And we are convinced environmental sustainability is fundamental in the recovery. Next slide, please. I would like to end, no, the previous thing, sorry. I would like to end by bringing to this roundtable the voice of the more than 2.6 million entrepreneurs we currently serve. They are the real protagonists of our story, as they prove with their efforts that given the opportunity, they can not only contribute to their own progress, but also to that of the world that is around them. Please show my second video.
Antes teníamos una pesca abundante por acá, ahora hay menos pesca. Antes teníamos más montes, ahora hay menos. Antes criamos chivos, cabras, ahora hay menos. No nos damos cuenta, pero ese repliegue de la vida salvaje, la vida silvestre, también nos afecta a nosotros. Mucha gente de aquí ha emigrado. El medio ambiente no es algo fuera de nosotros. Nosotros somos el medio ambiente, las decisiones que tomamos, lo que hacemos. Vamos a reducir el impacto del uso de agua, vamos a reducir el impacto del uso de energía, de combustibles fósiles, vamos a reducir el uso de pesticidas, vamos a reducir el uso de todo lo que pueda ser dañino a la
Georgia, are we
naturaleza.
moving on to the Q&A already?
Para reducir el consumo de agua, tengo el goteo, uso goteo. Esas mangueritas y esas llaves, todo eso se hace la irrigación. Para reducir el uso de energía, tengo los paneles solares que con el sol, aquí normalmente tenemos, yo diría 10 a 12 horas de sol, entonces con toda esa energía podemos hacer cosas maravillosas. Para la reducción de uso de pesticidas y de herbicidas, por ejemplo, uso policultivo. Se reduce la cantidad de químicos que tengo que aplicar porque la tierra está ya cubierta. La mayor parte de los trabajadores que hacen agricultura en esta área, yo diría 99% son de origen haitiano. Quiero que aprendan algo porque quiero que su vida mejore. No es solamente venir aquí y trabajar, es mejorar su vida. Cuando usted tiene una institución que está tan interesada en su éxito, es muy difícil que usted, o siempre es posible perder, pero la victoria, el éxito está mucho más garantizado. Hay que ir creando un camino y eso es lo que hemos hecho. Ellos me han dado un poquito, yo he pedido un poco más, me dan un poco más, yo vuelvo y pago y así es que ha ido progresando. Y yo creo que el mundo está entrando en un periodo de gran conciencia de qué hemos hecho hasta ahora y qué tenemos que hacer en lo adelante. Solo hay ahora, no hay nada más. Entonces cada decisión que tomamos ahora es la decisión de lo que va a venir. Porque este momento, cuando miremos hacia atrás lo que hice, lo que no hice, es eso. Y es como quiero vivir. Quiero vivir así. Mis acciones sean congruentes con mis palabras.
Thank you.
Thank you, Mrs. Dukas. And indeed, so we have heard from our three speakers, and we jump right into the Q&A session. Again, you can, as you can see in the slide, use the live discussion function at the bottom right corner of the live and digital platform to ask your questions to the speaker. So please do not hesitate. And I also invite again the other speakers to share their impressions and also share their questions should they have. But I would like now myself to ask a question, starting from Mr. Munro. I would like to ask you a really, I would say not umbrella question, but also starting from what you said so far and you shared with us. your impression and your perspective also in light of the EU proposal that just came out for a green bond standard, as well as the role that green recovery is having right now, and the COP 26. Not only how do you think the green investments will increase, but also how do you see the market getting ready? What is happening out there?
Okay, Georgia, you've raised a very big question.
I know, I have.
I think the big picture is that green is the new black. Everyone is doing it. I think everyone's committing to net zero. It is gaining attention at C-suite level. It's starting to get integrated into executive compensation. I think that the trend is in the corporate world is pretty positive. The thing that's more challenging is figuring how you get to net zero, and what is a legitimate pathway. And there is a lot of work being done on that. There are quite a few benchmarks available, but most of them are a little bit incomplete. I think if we think about the kind of the global picture, then we really need to work on how we demonstrate equivalence between the different regimes. So let's think about what we're doing in Europe, compare it with what's going on, let's say, in China, and see how those different standards would fit together. And in fact, that is exactly what is being done at intergovernmental level at the International Platform on Sustainable Finance, where they are trying to work out what they call a common ground taxonomy. And at the moment, I think this is more in the kind of study stage, doing a kind of early mapping of the different schematics between the EU and China. But I think the fact that EU and China are working together on this is a very strong signal. I mean, these are two of the largest economic blocs. So I think that this is also going to give us a very strong framing tool to move forwards. And as we discussed earlier in terms of the financial flows, I mean, it is really accelerating. I think the main concern that we hear voiced, in the media is that there is a risk of, for example, greenwashing. I think that is exactly what constructs like the taxonomy are designed to address. So historically, the big complaint from financial markets is we have no clear definition of green. Now they've got it. They're complaining a bit because it's painful to put it into action because it's quite detailed. But I think that's normal for any kind of transition to a new design. And I think once we've digested it, it'll probably, in 3 to 5 years' time, we'll look back and say, we were all too pessimistic at the time. This has really worked quite well. But that doesn't mean that we can't improve. I think the critical point is going to be to look at usability of the new standards and how we can improve them, because we will learn by doing. Everyone is doing it at such speed that we have to learn by doing. The notion of separating everything into a nice long planning phase and then testing and then implementation. I mean, given the time we have, often this is not possible. We have to implement and test and learn. And I think this is perhaps one of the key lessons. So I would say this is also the message that we in the at the EU platform on sustainable finance are often conveying to the Commission, that, look, you've got a wonderful design here, but let's keep it as dynamic as possible. Let's respond to some of the challenges we see in markets, adapt and improve. So I think that's the main message. And if you want a concrete example, I think many people are struggling with, for example, how to implement these standards across borders ex-EU. It is a real question. If you're a multinational with global operations, how will you integrate all this? It's not that straightforward. But we have to try. I don't know if that answers your question.
Yeah, no, that definitely answers my question. And also, I think it reconnects also to another question I had that is now more directed to Tula and Julia this time, because indeed we have been hearing a lot talking about the EU taxonomy, and we completely understand the function and why there is the need for an EU taxonomy. Also, Peter, you have been mentioning, but we understand the need. We understand also how difficult it is to construct something like that. But my question would be now to Tula and Giulia to understand what is from your side your expectation vis-a-vis the European Commission that is working on this EU taxonomy. What are your difficulties, or maybe better, what are the difficulties you see in putting in place and actually utilize the taxonomy, and also going beyond that, like everything that the Commission is doing also when it comes to corporate sustainability reporting and so on. What's your take on that? And what would you suggest if you had to speak now directly to them, as you probably actually are? So
okay,
yeah, Giulia, you can go, and we can go after with Giulia. Yeah,
very quickly. We find the EU taxonomy very useful, no, for defining what is green and what is not green. So in fact, the BBVA Microfinance Foundation have aligned its classification of green activities and destination with this taxonomy. But we could welcome, no, an intermediate version. No, we would welcome an extension of the taxonomy to include intermediate activities on a credible transition. We believe the regulatory and supervisory approaches should promote financing the transition, should be obviously non-complex and easy to implement. And this we think is important in order to ensure its buy-in by other jurisdictions in the world, and in particular in emerging countries.
Thanks, thanks, Tula, indeed. And Giulia, if you want to react as well.
Yeah, thank you. So generally speaking, I'm yes, taxonomy optimistic because I think that in a few years, with all the other element of the regulation and the CSRD, we will have information chain that will be complete. And so if I think with the hat of the investor, I think, yes, it will be quite complex. You will need the tools, but of course, everything in a few years, it will be up to us and to our choices and our yes, the willing to support the transition. So I think that the taxonomy tool will be very useful. If I think if I put on the hat of the insurance company, of course, I can see that technical criteria are challenging because yes, it's very clear, even if they're not quantitative, but they are qualitative. Instead, they are challenging too, because they describe a new way to do our work. That is focused on prevention, focused on like be consultant for our client. And as I told before, speaking of other project, we have to understand how to reduce risk to be able to carry the remaining risk, and how to even reward our clients that are able to reduce their risk. So it would be a big challenge, but I think, and as we demonstrate with other projects, I think that is the challenge we have to take on. So yes, I'm optimistic too.
Great, thanks, thanks, Giulia, thanks, Tula, again. And indeed, as I see that we do not have questions from the chat, I'm happy to also go on with another question that I would like to ask you. If now we know the importance also of comparability in the discussion. So indeed, if we want to focus on that, actually how these tools might be able to set a playing field, a level playing field for companies in different sectors to attract ESG investments. What do you believe could be the role indeed of comparability in putting in place these tools? Tula, if you want to go, I saw you might have a reaction.
Well, I do believe comparability and having a level playing field is important, and in particular, as I mentioned before, in the international arena. And I think that for this, we need international alignment, no, of the sustainable finance regulatory frameworks. And we need common global reporting standards, no, to converge into a single and coherent framework at a global level. As I said, those should be non-complex and easy to implement, and it is important that are implemented in all economies, and in particular to bring in emerging economies, because at the end of the day, if we want to achieve these sustainable objectives, we need all the world to be in.
Thanks, Tula. I don't know if also Julia or as well Peter, you might have a reaction on that.
Oh, yes. I mean, I have been working in the field of sustainability reporting for 20 years. So I recognize that comparability has always been, together with materiality, the big aim of sustainability reporting and the big challenge, because it's like at a point where you go towards, but you never reach. But again, I think that CSRD will help us and will help all the system to be a good step towards this aim, because a step that maybe with the non-financial reporting directive we weren't able to really do, because I think that comparability remains an issue. As we saw about the about how probably the standards will be, I think that three levels and standards, with the general reporting, the sector-specific reporting, and the corporate-specific reporting, I think should be a good balancing between comparability needs and between needs that every corporate has to report and to disclose their proper and their unique share value model creation. So I think we are yes, we will be able to do a very big step.
Thanks, Julia, for your answer. And I don't know also if Peter, yes, you would like to complement on that.
I'll be very brief. I think what the two ladies have said is very clear. I mean, let's remember, it depends what perspective we're talking from. Comparability in whose eyes. If we're talking it from the point of view of an investor, of course, the corporate level of sustainability reporting comparability is critical if they're investing, and they need to know the overall entity performance. But if they're looking at, let's say, instruments and that's perhaps more also for equity or for the broader strategic context on other instruments. But if you're looking at debt capital markets, there is already a lot of work that has gone into comparability of sustainability impact in reporting, and there are templates already out there, so that if you do a sustainable debt product, you have to, in a certain sector, there are recommendations as to which indicators you should report to promote that comparability. And that's been going for a number of years now. And that has been very, very much welcomed by investors. And in fact, what we see is that you know, the vast majority of investors say that this is exactly what they want, because they are data-driven people. And I agree with CSRD, we will get, you know, arguably a different challenge, which is we'll have an awful lot of data, a lot of which is quite comparable. But the critical question will then be one that was raised earlier, which is, what are the implications of these what's the correlation, these different data points with risk, with outcomes as well? You know, to what extent is the reporting linked to outcomes, or is it more just something else? So I think we've got to be, you know, conscious that even if things are comparable, we need to know what the end result is that we want to achieve. You know, is it impact, is it risk related, and so on, and maybe to think about the indicators and the reporting in that way. And I'm sure that's what we will get in CSRD one way or the other, and it'll come through in the accounting and everything. And what's interesting is that if you ask some of the, you know, the accounting gurus, well, where are you going to find your indicators and thresholds for materiality, for financial materiality? They say, I mean, the people at EFRAG, for example, they say, well, we're starting to look at the technical screening criteria in the taxonomy, because for us, this is kind of a starting point to figure out, you know, where there may be regulatory risk or market risk. So, you know, watch this space. I think it's going to be very interesting. Thank you.
No, thank you, Peter, and Tula and Julia. There are other questions that come also to my mind. I see that the time is actually running, so we don't have that much time. Just maybe one quick reflection, if you have been thinking, and I'm sure you have, with CSR Europe, the topics of the just transition, as well as the social side of investments, is also really important. So I would say, if you would like to give a point of reflection on the social taxonomy, because this is something that will be done, but it's also going to be done a bit later. And by later, we mean quite a lot. So if compared to what is being doing right now. So if you want to reflect on that, what's your take on the social taxonomy as well?
Okay, very, very quickly, our approach to sustainability is holistic. We include inclusive growth and climate action. So we welcome very, very much that this social taxonomy is on the way.
Thanks.
Yes, I totally agree. And it's interesting, the model that is being promoted by the Commission, with two levels. The more basic about rights protection, and the one towards impact. So yes, we are waiting. We are looking forward to social taxonomy.
Maybe I could add to that and say something which is true of social as well as of environmental, especially where the criteria are not yet fully stable. One thing that EIB is offering to its clients now is technical assistance in integrating taxonomy and interpreting, emerging standards as part of financing. So, one of our general comments to our clients these days, and potential new clients, is if you are looking at all these new constructs and finding them a bit complicated and a bit challenging, well, we're a bit unusual in that we're a development bank and we have hundreds of engineers and economists who spend their whole life analyzing these criteria and are able to kind of help you get through them. So that is also something that's important. I think it goes back to one of Georgia's earlier questions, how do we scale this up? And the reality is that for many of us, it's a very complex and deep learning experience. And, we need to have a team effort. And we're also working with all the other European development finance institutions to look at how this will play out in emerging markets. But, for Europe, we're also offering this, and we're both acting as an investor and as a provider of advice to help bridge the gap. So those of you who have concerns and would like to discuss this, you feel free to approach me or other colleagues. It's something that I think is needed, because if you look at the latest taxonomy publication of 1,000 pages, if you're a diversified firm, you've got quite a lot of homework to do, and you maybe want some advice on the direction of travel. I'll stop there.
Great, thanks, Peter. And indeed, I welcome everyone who is listening in to reach out to our speakers. I remember also Tula shared some links in her presentation, and I also invite her to use the networking function that we see here to share with people the insightful materials that have been mentioned over this roundtable. So yes, indeed, we are 3:30 is exactly the time we should stop. We should end this roundtable. But I'm really happy to have had this opportunity to discuss with you, and I thank all the speakers that joined us in the two panel discussions that we had. Again, I invite the audience not only to network, but also to discover a bit more about what CSR Europe does using the CSR Toolbox button at the top of the digital platform to connect with us. And also I would like to invite you to the last session that we are hosting today, and that is on the role of sustainability education and certification, is at 4 o'clock. And I thank everyone also for the 4 days that we had of the European SDG Summit. It has been really, really, really interesting, and I wish you a very nice afternoon. Thank you.
Thank you, bye.
Thank you, bye-bye.
Thank you very much.